Welcome. You're watching the Budget Trade. The focus today is on the consumer durable space, and Praveen, Sahay, research analyst of Prabhudas Liladhar, joins in to tell us what the sector is expecting. Hi, Praveen. Good morning. Thanks a ton for joining us on the show. Praveen, to begin with, it was just 2 days ago when the white goods PLI window has also been extended by the government for ACs and LED production. We, of course, talked to the likes of Blue Star, who've indicated that they would be considering applications. But just one step down, in 2 weeks, we'll have the budget on us. This is a sector that usually wants and gets awarded with impetus for growth. Let's start with what are the key demands of the sector in this budget?
Yeah, definitely. Thank you, first of all, having me in your channel. So first, definitely is some incentive related to the PLI. So as you already know, that's the AC and the LED PLI scheme has been extended for further applications. Because in the last, what the government has budgeted for 6,000 odd crore, only 34% has been utilized so far. So that is another reason why they had come up with a further, inviting application for that. Even in the other, segment of the white goods as well as electrical goods, the further the PLI scheme definitely would benefit the domestic manufacturing and as well as the demand, because that is again a cost related to the product which will going to minimize. So that is the one. The second is very high GST on the durable space, which is in the around 28%, where some rationalization definitely will bring down, if that will bring down, then that will accelerate the growth for the consumer durable space. Thirdly, the increase in infrastructure spending, that will also, drive the growth for the consumer durable space in terms of the logistics or the market access in the minimal time, as well as the cost related to that will increase, especially in the wire and cable space also. With the increase in the outlay of infrastructure spending will accelerate the growth for the wire and cable space as well. So these are the few things which consumer durable segment as a whole looking forward to this budget to accelerate the growth in the coming years, actually.
Right. Praveen, I know a lot of the PLI schemes are largely just announced in principle and the execution takes place outside the budget, but are you expecting more products, more schemes to be added under the current PLI scheme? And how important is this at the current juncture for the sector?
Yeah, definitely. So one of the important, driver for currently consumer durable is a PLI scheme in the different segment in terms of in the PCB assembly to the semiconductor space. If the outlay to increase or to extend the timelines, definitely it's going to reduce the cost, because we are, few years back largely dependent on the import. And with these PLI incentive, that's become more viable for manufacturing in the country. And ultimately, it's leading to the reduction in the cost for the sector. And definitely with these cost reduction, more affordability will come in the consumer durable space. And as you all know that the penetration level is quite low for each and every product, AC of around 7-8% to whether it's a refrigerator or washing machine. If I compare with the other developed nation or developing nation, our penetration is too low. So with these incentive, I believe the penetration will improve, and so as for the sector, growth rate.
Praveen, what measures do you believe will have a material impact on the sector in the near to medium term in terms of announcements from this budget?
Yes, so announcement, the first, as I also said about the increase in infrastructure spending, and especially to the some infrastructure related to the power sector as well, which will lead to the growth in the wire and cable space. In the last couple of years, we are seeing that the infrastructure spending from the government has increased, and which has actually led to the increase in the growth of the wire and cable space. There is a lot of capex also happening in this space, and that is driving the growth for them. That is the one what we are looking for in the near term. And next, as we are discussing about the PLI, so PLI total outlay related to the AC and the LED is around 6,000 odd crore. So in that, around 34% has been utilized so far. So similarly, in the other segment, because so far, the coverage for the whether it's a manufacturing of the consumer durable space or the ancillaries related to the consumer space, if some more inclusion of the product will happen, that will further drive the growth for the segment.
Praveen, what companies or stocks do you think stand to benefit most from this budget, and hence which companies would you then load up in your portfolio that you're most constructive on? So budget trades in that sense.
In the entire budget, I am more hopeful related to the wire and cable. The infrastructure spending to increase, it will definitely directly benefit the cable companies. And in the wire and cable right now is doing better off. The names like a Polycab, KEI, even the RR Cable. Those are the leader in this segment. There are some small players as well who are getting a benefit of that. So I believe in the near term and direct beneficiary from the budget, I believe the wire and cable would be the major ones. Next would be definitely the companies which are in the EMS space, like of a Sirma or Avalon or Keynes, which are also getting a benefit of the PLI scheme. And especially in the AC or the LED space, if I look at the Amber or Dixon or even the PG Electroplast, which are there in this segment for manufacturing, are going to get the benefit with the PLI in the near term. But ultimately, if I look at as a long-term perspective, the consumer durable brands like of the Havels or Crompton Consumer or even Blue Stars, those are actually ultimate beneficiary of all these initiatives. So they are for the long term. Definitely, we are looking at these companies to improve their profitability and the earnings in the coming years.
Praveen,
so my top.
Yeah, your top, exactly what I wanted to come to. Keeping valuations in mind, if there are investors watching the show, and if they had to go out and buy some of these consumer durable names, your top 2 or 3 stocks that you recommend even today at this price to play budget?
Yes. So my top pick out of entire my coverage is in the wire and cable space, which is on the RR Cable and the Polycab. The one thing is, concerning in the durable space right now is the valuation. So almost all are trading at their peak of valuation. But if I look at RR Cable, which is trading at around 32, 33 times, comparatively around 44, 45 times of your Polycab or 48, 50 times of a KEI. So there is a lot of room for them here from here onwards as well. And because the top line growth for all the companies are going to be in the range of around 20%. So my top pick is the RR Cable first, and also at this juncture, looking at the capacity building as well as the outside the end user industry growth prospects, Polycab is also looking better off. Whereas in the consumer space, these are in the wire and cable. In the consumer space, if I look at everyone has reached to their peak of the valuation. But if I need to choose out of that, definitely I'll go with the Havels, because there are 3-4 major verticals which are driving the growth for them. Even though that stock is currently trading at around 57, 58 times, which is quite a higher trajectory. But the growth is also quite evident from whether it's a cable segment or from the Lloyd segment or even the ECD segment, where the fan is doing quite well for them.
Right. And very lastly, Praveen, it's been a good quarter from the look of it. We've seen some of those business updates. Expectations are that the summer season has benefited a bunch of these consumer durable companies. We also go into earnings season in a few days. How are you feeling about some of these companies with regard to earnings? Where do you think the outperformance is coming, and where do you think there could be some disappointment?
Yes, so definitely the RAC segment is expected to deliver a very strong numbers in like a Voltas or a Blue Star. Even the Lloyd, which is a part of Havels, is expected to deliver a very strong number because this season the sector has grew by around 30%. and these companies expected to outperform those numbers. So in terms of the very good numbers, the RAC players expected to deliver a very strong numbers for a quarter. Little disappointing. Even there is a price hike, so which were quite awaited from quite some time. There also they have taken a price hike. So mix of price hikes plus volume growth, we will see a good numbers from the Voltas, Blue Star, and even the Lloyd. Whereas on the fan segment, which is also a seasonal product, and being a heat wave and a severe summer, expectation for the fan sales was on the higher side, which, as per our channel check, has seen their little bit on the lower side. So maybe just a double digit or high single digit of a growth there we are expecting. So there is some kind of a disappointment we will see.
Right. Such a pleasure talking to you, Praveen. Thank you for, consolidating this and wrapping this up for us in terms of what the sector as whole would be eyeing in this budget. Thank you for your time. We'll hopefully connect back with you when some of these earnings come our way.